Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Tuesday. Hope everyone's doing great. All right, so what do we have going on today? Well, if you caught the show yesterday and on Sunday, you know that the economic calendar is a fairly sedate one until tomorrow. And once we get to tomorrow, now we're CPI, PPI, etc. Today and yesterday, we were pretty light on hot zones. So there wasn't a whole heck of a lot to have to be concerned about in terms of that intraday volatility from different economic releases. So it's pretty clear sailing in terms of day trading. Now, one of the challenges we faced yesterday when day trading and my Sector Secrets Mastery folks, we had a pretty good day trading. Our main trades were to look for a crude oil setup, which, and I cannot emphasize this enough. If that price, think of price as the ball, and our trade is kind of the plate. That if price does not come over the plate at the spot that we know that we can connect with a high percentage of the time, high probability, we don't take the trade, right? And NASDAQ was our first and really only trade yesterday. And we babysat this thing for what seemed like forever. When I say babysitting, I mean, we have a trade, hadn't stopped us out. We're waiting for it to follow through. It took most of the morning for the NASDAQ to finally roll over. And that was seeing that we had hit a resistance zone. You can see it here on the chart. We traded up into the hourly price movement range, time and volatility resistance. And then, well, you can see what the chart did. But it took some time. Each one of these candles is 5 minutes. Look how long we had to sit and wait and sit and wait until we hit the first target. And then we hit the second target as we went into the midday doldrums. Don't be afraid to let a 5-minute chart, as long as it's still valid, or a day trade, as long as it's valid, just get some traction, right? Sometimes it does take some time. And then a lot of the traders also realize, well, if I'm short the NASDAQ and that's the trade that I'm hanging on to, in terms of what I was personally doing, do I want to take pullback buys in uptrending individual stocks, right? Apple, Amazon, for example. I really don't. I don't want to be in a situation where I've essentially hedged myself. I don't believe in hedges, right? Hedges are in my lawn, not in my trading life. And the lesson was you only need one or two good day trades. By 11:30, what do we have? We had essentially a 13, you can see here, about a 13,385 entry take us down 160 NASDAQ points. That's worth waiting for. And I hope that makes sense. Don't get twitchy, right? Don't get twitchy with your day trading. And I think you're going to find just because it's a short time frame doesn't mean it's short attention span. So I think try that out. See if being a little bit more patient with understanding where the validity of the trade is and then letting it follow through. And it's not as if, look, this is not set it and forget it. I don't believe in that, right? Especially when it comes to day trading. This is not a set it and forget it. I have to monitor it. Is the underlying market trend shifting? Do I need to make any adjustments? Is there an economic release? Are there any geopolitical shenanigans happening? Those are things that will continue to help us manage these trades. All right, so let's get to it. As always, this show is about your questions. All right, so let's go ahead and jump into, let's see what we have first here. All right, Megazord. What we have is, what is the best course class membership for day trading with me? Oh gosh, the Sector Secrets Mastery. That's the clubhouse. That's the think tank. That's where I do all my trading, day trading, swing trading, and investing. Oh, I should really call it position trading, because that's the way I process it in my mind. In fact, I was just tweeting this morning. I'm trying to enjoy contributing on Twitter a little bit more. And I just tweeted this morning, time frame dictates time horizon. Investing for me is a weekly chart. Swing trading is a daily chart. Day trading is a 5-minute chart. Don't look at price any more than you really need to not want to. What happens to investors? One down day, oh my gosh, what's my account doing? Who cares? Time frame equals time horizon, right? So if I'm looking at a time frame of a weekly, right, one day within the weekly is just one of 5 sessions that's going to work its way into that single weekly candle. So, depending on what your time horizon, what's time horizon, by the way? How long do you anticipate being in that position, right? How long do you anticipate being in that position? That's time horizon. So that's the way we want to process that. All right. So I would say just come check out what we're doing in the mastery. And thank you for the question. All right. And by the way, you know what, Megazord, I think, and I'm looking at all the names here. There are members of my Sector Secrets Mastery in this room. Hey, my Mastery Mastermind folks, let Megazord, hey, I'm not telling y'all what to say or not to say. Give them some feedback. Let them know what you all think, how you all are doing, and I do appreciate it. So Megazord, keep an eye on the chat window here. I'm sure some of my Mastery members will chime in and let you know how they're doing. Okay. All right. Can we take a look at? Hey there, Jose. Can we take a look at BSX? Of course. So let's take a peek at the daily time frame of BSX. All right, there we go. Structure dictates strategy. Strategy dictates indicators. That's the way it always has to be, gang. I'm not telling you what strategies to use. I'm not going to tell you what indicators you have to use, although I give my mastery folks the bulk of what I do. Remember, if you have a strategy that needs a particular indicator, know when to use it, right? So in this case, I've got a choppy market still, Jose, and then that's just going to map to a slow stochastic. And being aware, I think this one's interesting, Jose, because we're in the very early stages of transition. We're trying to get above the 200 propulsion. We're trying to go green momentum, green trend. It's very fresh. It's very new. That means, imagine a 4-wheel drive going up the side of a very kind of hilly, rocky cliff. It does need traction, right? It does need traction. It doesn't mean if it progresses up, it maybe won't slip back down a little bit before progressing higher again. So I would say be careful here. You've got a transitional market. I would say you probably, I would see if you can't. Here's what I would say, Jose. Great trading starts with a great watch list. I think this could be a great symbol going forward, and I would be marginally bullish, favoring a pullback. So my thought is maybe put this one, sort of put a pin in it, kind of put it aside, but maybe find some better non-transitional stocks that are a little bit more clearly in chop or a little bit more clearly in an uptrend. So great question. Next up, XLE. Nancy, how are you? Nancy, this is chop. I don't have anything other than we're neutral and we seem to be sitting at the 200 propulsion. With that being said, I don't have a setup right here. So again, the ball game's going on. The pitcher's going to throw the ball. Is it over the plate in a place that I know for my strategies and my approach is high probability? Just because the pitcher's throwing the ball, we don't have to swing at it, right? We are in, I know, I'm going to beat the baseball analogy into the ground. I love baseball. We're in a no strike game. No one's going to call a strike on us. We can let as many pitches go by as we want until that pitch is over the plate where we want it. That's not what I have right now. So I'll just let the market keep throwing pitches until one of them is mine, right? So thanks for the question. McDonald's or Coke? Well, they kind of hang out in the same group, don't they? Kind of hang out together, right, Robert? Double green, north of the 200, looking pretty good at McDonald's for a buy the dip. I'd keep an eye on the 21 exponential propulsion. I'd pass on Coke. So where the wheels fall off the wagon for Coke? It's chop. I will always prioritize a trend. Look, gang, if we look back at 2020, we look back on 2021. This is not everybody, but I would, dollars to donuts, it's most of us. All of us tend to do better. Most of us tend to do better in uptrends. Our job is to prioritize trends. Uptrends first, downtrends second, chop last, right? Those corners of the market, we've been doing this in the mastery, right? What did we do last Tuesday? We're going to do it again this Tuesday. 3 o'clock, Mastery folks. So we'll have our day trading from 9:20 to 10:35, and then we'll have our watch list building longer term view 3 to 4 p.m. Eastern today. We prioritize uptrends, right? We have a growing list of names that look more like McDonald's than Coke. And there's not a lot of them, but we know that the probabilities are better with certain uptrending characteristics, and McDonald's has got those. All right, next up, what are my thoughts on trading 1:30 to 3:50 p.m.? I don't have a problem with that, Martha. That's the PM session. It's just not my preference. From sort of nose to tail, from top to bottom, yesterday in the NAS in the morning, 157 points. I think I pulled 157 or 162, something like that. I'm trying to remember what it's going to be in my journal here. I have a morning like that. There is that temptation to do it again. My overall operating system is, I know it's going to sound so inspirational, don't screw up. That's my operating system. Rog, how can you start your trading day and just don't screw up? Don't break your rules. Don't bend them too badly, right? Rules should not be that limber. And ultimately, what I'm thinking is, after I've had a really good morning like that, look, that was a 2-hour time span, 120 minutes, right? That was more than a point a minute. I feel that what I'll likely do is sort of screw up. So I'm thinking to myself, you had a good morning. There are other time frames and other setups you want to manage. So if I, especially if I have a good morning, I don't want to trade the afternoon. And if I have a terrible morning, I don't want to trade the afternoon. There's got to be something extremely compelling as we go into the close to pull me back in. Is it a viable time to trade? Absolutely. The hourly price movement ranges are very powerful if we're viewing them in the best underlying market trend environment. But mornings are my jam, Martha. That's absolutely where I do best. All right. Do I cover futures? Yeah, Rocky, we do. Yeah, we cover. Well, I mean, for example, when we were talking about NASDAQ, I'll talk about the volume and open interest, which contract. And when we're trading QQQs, which some of our traders took QQQ puts in lieu of the micro or mini futures. I mean, we're mostly doing options in that room. But of course, in order to trade QQQ, in the way that I analyze the NASDAQ, I have to look at the NASDAQ futures. That's your more complete, right, view of what's happening. QQQ is then a spinoff, right? It's a spinoff. It's an alternative to the NASDAQ. Micro is another alternative to that mini contract. So there's that choose your own adventure aspect to the way that I like to take the trades. But we have to start with the touchstone market. If it's, say, GLD, got to look at gold futures. If it's the S&P, a lot of folks ask me about SPY, SPX. That's the second decision. The first decision is there a setup on the ES futures? Then that can map out to micro options on the ES, options on SPY, options on SPX, but we set up the future. So yeah, it's inevitable. We have to, yes. Let's see. Next up, Papa Kilo asks, a sector slow stow has all the S&P sectors. A sector slow stow, Papa Kilo, is just a custom slow stochastic. I'll give you the settings. It's a custom view of a 21K 3D 80/20 slow stochastic. So if you were to pull up on TOS, I'm looking at TOS right now, their slow stochastic, use an exponential, 21K 3D 80/20 overbought and oversold, you're going to get the same signals as I'm getting on my sector slow stow. What makes it a sector slow stow is I make it available to my sector mastermind, and that the color changes, the red, green, that's just easier for my eyes. I am terribly, terribly nearsighted. And it just makes it easier for me to see shifts in color rather than two lines crisscrossing, which when you look at my charts, you'll say, oh, Rog, that's why everything's color coded. Yeah, because I can see shifts in color a whole lot better than I can see two little lines cross each other or this little line cross that level. I like the color. And that's all that it is. All right. Let's see. Stephen, I don't know what trade. I mean, I think I was talking about the NASDAQ. Yeah, it was an hourly price movement range resistance level that I confirmed to be overbought. I mean, that's really pretty much it. It's got to be in the right neutral environment, and then we just go down the list of, is it in the zone and how do I confirm it? I mean, I think that was probably what we were talking about at the time. All right, and that was it. That's really in a nutshell, and not really skipping that many steps. That's how I day trade. EOG, comment on direction. I am short. I'm with you. I would say, I'm not with you literally, Sam, but I'm with you in terms of your direction. You're short. Is it my favorite short? I would have much rather this still been in that double red structure, but we're bearish neutral. I agree with you. We're still struggling to really see any footing above the 200 propulsion. I think you're in good shape. Yeah, I think you're in good shape. All right. Next up is let's see. Avi asks SPY. All right. So we're going to start with the ES. Double green on the daily. Yep. Slow stochastic overbought. Yes. Darvis resistance. I'm with you. Who will be right? I don't know, but I will tell you from a probabilistic standpoint, neutral market overbought at resistance south of 200 propulsion. I'll take that bet. And 30 years and a lot of repetition, got to put the reps in, to see your probabilities play out. It would be as if we go to the gym and we do one rep and done, biceps are bicep and shoulders, delts are ready. We know you got to put the reps in. And the only way you see things to scale is just putting in the reps, putting in the trades. I will say if I put in the reps and I play that setup to scale, right? One after the other under the same market condition, I will be ahead. Usually experience has told me about 6 to 7 out of 10. So 3 out of 4 times, the market's going to be in transition and it's going to go higher. Most of the time, and I would say a profitable amount of the time, that's going to be a fade. So who's going to be right? Individually, situation by situation, we never know. We never know. I've been really trying to press this idea that we do not play prediction, which I know you are not asking, but we don't play prediction. We play probabilities. That's why I don't believe in here's the target. Am I going to put some ridiculous statement out like 4,200 or 3,800 target? No, right? That's a waste of your time and my breath. However, if we say, as long as we stay below the resistance of the 200 propulsion, as long as we're finding fatigue at that Darvis level, as long as we're neutral, as long as fill in the blank for the criteria that you need, I'll play the probability. So as far as a pullback goes, the last time, so this is another different thing. I'm not going to predict where we're going. I'm going to look where we were last time we found support or resistance. And that's going to put us around 39.60. Remember that old saying, what was previous support becomes resistance and vice versa. Using previous levels is what Darvis does. I use previous levels. I don't look at projections. We want to see where were the previous swing highs and swing lows. And that's what that Darvis is going to do by way of a pattern, simple pattern, time-tested pattern called minor highs and minor lows. And that's what that Darvis will track. So cool question. And I would say pull back possibly to that level. But if we go double green in the interim, if the structure of the 8, 13, 21, 34 goes double green, then we transition to a different strategy, right? That's where we have to continue to monitor what the underlying market strategy does. All right, gang. Thank you for all the, oh gosh, look at all of you. Thank you so much for the feedback on the mastery. And, we try to make it as inclusive of all the things that I do as possible. So we've got the short-term, daily, and the longer-term time horizons all built into an approach that reminds you don't have to sort of, kind of stuff yourself into a strategy because that's all we do, right? In other words, going through summer, it's been tough to find trends on the daily. It's been tough to find follow through on the daily. So we did what? We day traded. So, we started talking about day trades. We also found that there is some interesting weekly opportunities for a longer term time horizon. So we added that in. And that's the flexibility and the ability to shift gears that I think is really, really helpful. So I appreciate that. There was a question about the video. If you go back to the Simpler Trading YouTube channel, I believe it was a video. I'll have to look that one up. If you take a look at my last couple free videos at the Simpler Trading YouTube channel that aren't charts and coffee, I think it was last Thursday or Tuesday that I did the walkthrough of the day trade. So just check out. I only have a handful of free videos. I do them twice a week. So if you go back and take a look at the last 2 or 3 of them, you'll get a good view of what I've been doing day trading wise. I think that was Rocky's question. I don't have it off the top of my head, but yeah, check it out, and I think you'll find what you're looking for. Okay. All right, gang. I gotta go. I will see you all tomorrow, same time, same station. In the meanwhile, caffeinate and dominate, gang. I'll talk with you soon.